Just to keep all employers and lawyers on their toes, the government has today published a 16-page policy paper setting out further provisions relating to the new job support scheme launching on 1st of November. And they incorporate Chancellor Rishi Sunak's announcements earlier today in relation to government and employer contributions, which surely make the scheme more attractive and financially viable to a number of businesses. I'll just take you through the main provisions of the guidance, which is quite technical in places and thankfully gives some clarity as to how the grants under the scheme can be claimed. So two types of scheme are now defined under the guidance. JSS Open, which is for employers to use where they face reduced demand and need extra support to help keep their employees attached to the workforce. So I call that a standard scheme. Then we've got JSS Closed for employers who are legally required to close their premises as a direct result of coronavirus job restrictions, typically where a business is ordered to close because it's in a particular industry that's restricted under either Tier 2 or Tier 3. Employers are permitted to claim from the JSS Open and Closed schemes at the same time, but for different employees. So you can't claim on the same day for the same employee under both schemes. So these are provisions applying to both the open and closed schemes. An employee is eligible if they have had an RTI submission made in respect of them between the 6th of April 2019 and 23rd of September 2020, and obviously they remain employed. If an employee ceased employment after the 23rd of September, they can be rehired and claimed for. So just as with the furlough scheme, if they've been made redundant, they can be brought back and claimed for. Be very careful about the agreement that you actually reach with the employee there, though. Employees on temporary and zero hours contracts are included. Agency workers are included if they are employed by the agency, so seemingly excludes those more typical self-employed agency workers. Employers are permitted to top up wages above minimum contributions if they wish. There was concern that they might not be able to do so because of the wording in the previous guidance. And employees can undertake training voluntarily in non-working hours, exactly the same as the furlough scheme. So, in terms of conditions for claiming, employers can't claim for an employee who's been made redundant or is serving a contractual or statutory notice period. Seemingly, employers are permitted to consult with employees, but at the point at which they're placed on notice of dismissal, they have to be taken off the scheme. Unlike with furlough, where controversially the grant was used to cover a proportion of notice pay. National insurance and pension contributions remain payable by the employer, and that's on the full amount paid to the employee, including any amounts met by a grant. No agreement can be made to reduce wages below the amount claimed under the scheme. However, the wording of the guidance does suggest that if there are deductions which were agreed to have been made prior to the introduction of the scheme, they can be made from net pay. With regard to making claims, the first claims can be made from the 8th of December using the gov.uk portal, which I think is yet to be set up. There are enhanced measures in place now to prevent fraudulent claims, again I think arising from the significant concerns over the furlough scheme. Penalties of up to 100% of any overclaim, publishing details of employers who are charged a penalty, and publishing a list of employers using the scheme to make it easier for the public to report fraud. Very importantly, grants claimed under the job support scheme can be used by employers to meet the lower earnings limit of the job retention bonus. So on average, in November, December and January, an employee has to have earned £520 per month. The amount claimed for by way of the grant can be included in that sum very helpfully. So looking at provisions specifically relating to the JSS Open scheme, employees have to work a minimum now of 20% of the contracted hours, not 33 anymore, and they must be paid as normal for those hours. Now this can include training, and I think if businesses want to make use of the scheme but have no work at all for employees, it will make sense to require them to undertake training during this working time. For the hours not worked, the employer will pay 5% now of reference salary, up to a maximum of 125 per month, although they are permitted to top up, which we'll come on to. The government will pay 61.67% of salary up to a maximum of 153,175 per month. So the guidance says an employee will therefore receive at least 73% of their normal wages where they earn £3,125 per month or less. Now, financial impact test applies for large employers, those with over 250 employees as of the 23rd of September, except for registered charities. Essentially, they have to show that their turnover is equal to or has fallen since the pandemic to make use of the scheme. A written agreement must be reached with employees. Very hopefully, HMRC will publish further guidance on what to include in the written agreement by the end of October, so they have 9 days to do so. Reference salary, so very similar to the job retention scheme. The reference salary which is used for these calculations includes the same payments as under the CJRS, so employers can take into account non-discretionary overtime fees and commission. For salaried employees, the reference salary is the higher of the wages in the pay period either prior to the 23rd of September or prior to the 19th of March. For employees with variable pay, the reference salary is the higher of the wages earned in the same calendar period in the last tax year, the average wages payable in the the previous tax year, or the average wages payable from February to September. There is again the concept of usual hours under the JSS Open scheme, so those businesses who have had to run the complex flexible furlough calculations will be relieved to hear that this really mirrors that. So the concept of usual hours relates to the number of working days in the month and the employee's usual work cycle. So for fixed hours workers, we use the higher of the contracted hours in the pay period either prior to the 23rd of September or prior to the 19th of March. For variable hours workers, we use the higher of the hours worked in the same calendar period in the last tax year, the average worked in the 1920 tax year, or the average hours from February to September. So we calculate the repeating working pattern and the number of days in the relevant calendar month that the employee is to be claimed for. Finally, not too much on the JSS closed scheme. Employees are eligible if their primary workplace is at premises which have been legally required to close as a direct result of coronavirus restrictions, and if their employer has instructed them to cease work for at least 7 consecutive calendar days. Again, written agreement must be reached with the employee to stop working. That must be available to view by HMRC. And further guidance on the reference salary just for the closed scheme will be announced by the end of October, so that may well differ for some reason from the calculations under the JSS Open scheme. Still awaiting a formal Treasury direction to accompany this, and there are elements that are subject to further guidance, so we will keep you updated. Thank you.